I'm Angeline and welcome to Beat the Street, the show that gives you all the tradable news and data ahead of the Wall Street Open. Coming up, PCE on deck. Investors awaiting the latest inflation data ahead of Jerome Powell's speech, and oil inching higher as energy traders eye the outcome of the OPEC Plus meeting, whilst keeping an eye on COP28 as well. Walmart is looking to India. The US retail giant is importing more from India and buying less from China. We'll tell you more in a second. First of all, good afternoon. I'm Angeline Ong and welcome to this new edition of Beat the Street. Not long now before Wall Street starts trading, just having a look at the equity markets there for you. We're seeing quite a tepid start, but we do have some breaking news just coming through. This is the core PCE price index, the month-on-month figure. We were expecting 0.2% and it was bang in line with expectations. In terms of the year-on-year figure, also bang in line with what was expected, 3.5%. Of course, all this coming in a time when the markets are looking for any reason to pivot. Many Fed officials recently coming out to indicate or suggest that perhaps US interest rates are now on hold, and perhaps the clock is ticking on how soon we'll see the first interest rate cut from the US. Of course, the main event is Fed Chair Jerome Powell's speech on Friday. So all that to play for markets, not showing much of a change, given we had that PCE number bang in line with expectations. In corporate news, Dell Technology reporting after the close tonight. Now, if the third quarter is anything like the fireworks that we saw in the second quarter, then it should be a good set of numbers. Here's Jeremy Naylor with more.
Yes, we'll look at the share price in just a minute, Angie, but indeed, you're right. It was an amazing second quarter. But let's take a look at what we've got in terms of what the analyst consensus is for the third quarter numbers. As you say, after the bell this evening, let's take a look at those figures. The street anticipates earnings of $1.46 per share on revenues of just over $23 billion. Now, Dell's earnings have beaten consistently the Zacks consensus estimate in all the trailing four quarters we've seen. There's been an upside earnings surprise of just shy of 40% on average. So that's positive, but there are considerable headwinds in this quarter. Continued sluggish IT spending by corporate and global enterprise customers expected to have dented the top line growth. As we know as well that consumers are feeling the pinch from many areas. So it's really coming at the company from all aspects. Moreover, analysts are also saying there's been an unfavorable foreign exchange headwind. Let's take a look at the share price chart. And I want to show you this bottoming out that we've got here, which I think is an interesting technical move that we've got. And I quite like the look of this sort of shape that we've got. And technically, things are doing pretty well. We are currently trading not all sessions, but as of last night's close, this is the highest close we've seen since this massive, great big gap. But look at what happened last quarter. That was that 14% rise. We saw a massive gap up after the close of the markets on that second quarter reporting. And then it went on to give us further gains as well. Now, there's just one other area we need to discuss, and this could be a big mover for shares later on today. Analysts see Dell benefiting from booming demand for artificial intelligence servers. Now, following Dell's last set of numbers, Morgan Stanley said the group was emerging as an early generative AI winner. We'll have to see, but at the moment at least, we are setting ourselves up potentially for what could be an interesting set of numbers. Pressure on one side, but it could well be taking advantage of what we now know to a big surge in interest in AI. That's coming after the bell. Angie, back to you.
That's right, Jerry, and no pressure there for Dell investors. Year to date, Dell shares up more than 86%. So quite an impressive rise there year to date. Now, staying with corporate news, we have Ford as well in focus, because Ford shares, as you can see here, all sessions on the IG platform, and it is rising more than 8% as we speak. It's just come off slightly now. Ford coming out saying that they've pegged the cost of a new labor deal at $8.8 billion, and it has joined rival General Motors in cutting its full-year profit forecast. All this due to the lost production, lost hours from those lengthy strikes in the auto sector that we saw a few months ago. Now, the deal with UAW, the United Auto Workers Union, reached after long negotiations, will add around $900 in labor costs per vehicle by 2028, which Ford has said it will try and recoup by cutting costs elsewhere. Now, staying with autos, we've also got General Motors in view as well, because not only is it an all sessions stock on the IG platform, but we are waiting on the CFO who will be speaking a little later on in the session at an event in New York. He's expected to update investors on targets for its struggling cruise robo-taxi unit. Now, one other big story that we are watching for you is, of course, coming out of the retail space, and it's to do with a longer-term story that we've been watching for you about many multinationals, including in the auto sector and also retail, have been shifting their exposure to India from China. Walmart being the latest one, saying that it's boosting its imports from India and cutting its reliance on China. 60% of Walmart's shipments came from China in between January to August 2023, and this is versus 80% in 2018. So a significant drop there. Walmart says that India is a key component of Walmart's supply chain. But this is something that is part of a bigger trend, because US and European companies have been shifting investment away from China to other markets like India. And India is one of the main beneficiaries of this redirected foreign capital. Everything from chip makers, Foxconn, we also saw some news from Apple as well. Tesla moving exposure to India comes at a time when there is geopolitical risk. And of course, many Western firms out there want to perhaps have their fingers in different pies just in case, just to hedge their bets in terms of production and their reliance on markets for their imports. Now, next on Beat the Street, we are also looking at interest rate sensitive momentum stocks, talking about Apple and talking about, of course, Microsoft as well. Just checking on the shares for you. Apple all sessions as well on the IG platform. And we are seeing that these stocks are edging higher since the last few weeks, and especially since there were these indications that perhaps we are going to see this potential rate cut as soon as, well, some believe in March. However, there is a school of thought out there that perhaps the markets are getting ahead of themselves too. Let's check in on Microsoft because that is another all sessions stock on the IG platform. Both these stocks amongst the heaviest weights on the S&P 500. Also, pay attention to companies like Humana and Cigna too, because they could fall. A source familiar with the both of them saying that the health insurers are in talks to merge. So look out for those two in the cash session. Now, another big thing that we are watching, of course, is that OPEC Plus meeting. We are looking out for this confirmation that OPEC Plus oil producers are going to agree output cuts of at least 1 million barrels a day for early next year, led by Saudi Arabia, rolling over its voluntary additional cut and smaller curbs by others. This is according to two delegates talking to Reuters ahead of that virtual event. Nothing concrete has come out just yet, but I can tell you that oil prices have been elevated or supported in the last few sessions. To talk about where they might be headed, IG's Sean Morrison joins us now.
As the markets look to the OPEC meeting for results, we are seeing Brent crude starting to rally anticipation of what might be happening there, extension of production curbs. And technically, it's shown a bit of a bullish price reversal. We have this inverse head and shoulders pattern here, which is just shaded in grey, which suggests as a function of this preceding move down that the prices may be reversing and changing direction. Now, on the upside, this breakout here above that neckline at 82.60 suggests that 87.20 could be a possible upside target from that. Some traders might prefer to wait for a bit of a pullback from that initial breakout for long entry and then look at possibly having a stop loss somewhere at about that 81.50 mark, or possibly even slightly lower, and that's depending on a person's threshold for risk.
Thanks very much, Sean. And I can tell you that looking at the Wall Street here, checking on the levels for you, US stock index, the indices are holding on to gains after the October PCE data that came in line with expectations. Also, just checking in on the initial jobless claims figures for the 25th of November. This is for the week ending 25th of November. We were expecting 220,000 and we got 218,000. So overall, still painting quite a resilient picture for the US economy. Well, that's it for this edition of Beat the Street, the show that follows all the trading action, helping you position yourself ahead of the opening bell. For more trading insights, do follow me on @IGCom and @Angeline on Twitter. This is IGTV.